And the end of that music and all that legal words. We're back with another episode of the Halftime Report. Got Tyler here on a rare Monday appearance. Gino Poor from California. Gino, I apologize. Let me start with you, my friend. Are you okay with the Dodgers not repeating?
Oh, I was getting tired of watching the home runs, Mark. It was just, home run fest. They slipped on that last game, so I got to give it to the Atlanta Braves. Good job, man. Good game. Great season. Kept me busy for baseball. The only thing I look forward to now, Mark, is the Rams have to make up for it, buddy.
Well, listen, the market is rewarding you with an all-time high and probably some healthy movement in your trading account as a consolation price. And Tyler, before we got going on the show today, I was like, man, what's your best trade? And what was your answer?
Throw a dart.
I mean, there's not a lot not working today, right? Tyler, let's get into this technicals. All right. All-time high in the S&P. I mean, we've had to suffer through a whole, 2 months without an all-time high in the S&P.
It's been hard. It's been pretty rough, Mark, but we're out of it now. We've come out of the cellar and the sun is shining.
Man, this is not the type of day you want to wake up with a ton of bearish trades, right? It's not the type of day. When we have, and we'll break down the technicals more succinctly here in a second, but when we have an all-time high breakout, how do you approach it from a broad perspective, Tyler?
Well, I think the thing to remember is it's not like on any given day you wake up and you flip a switch and you make a massive change in your bias. I am assuming if you've been paying attention to what's been going on the last couple of weeks, you have been bullish because the market has forced you to be bullish after breaking out on that, October 14th. I mean, pre-October 14th, we can talk, but after that, it's been a straight shot higher. So unless Friday's doji candle caused you to go buy a massive amount of insurance and batten down the hatches, I don't know that today changes much from the short-term trend that's been in place for 2 weeks now.
Gino, how are you approaching this market right now? I mean, we had that reverse head and shoulders, and Matt did a great job detailing that a couple weeks ago as it developed in real time, what to look for. We've had a reverse head and shoulders. You've had momentum. You have seasonality coming up. The bulls are froggy. That's a term I've been using lately. They just want to jump, and we're jumping here. How are you approaching this just broadly right now in your trading, Gino?
So, like I said on the newsletter, Mark, and thank God for the newsletter and the time we put into it. If you haven't checked it out, now is the time. If you haven't looked at it over the weekend, in the newsletter, we prep you, not only recap last week, but the most important, we prep you for the upcoming week for that exact question. And the question is, how do you prepare for the market? What are you doing? What side of the market to be on? This is a unique time of year right now, Mark, where we're looking for that end of year rally. And this week, especially 30% of the S&P 500 companies are going to report earnings. And it's not the quantity that matters so much. It's the mega caps. So the whole title of this week is the mega cap market moving week. So you really got to be careful. You've got to make sure you know which stocks have earnings in your sector, your industry. And if you don't know how to play earnings, stay away, because that's a very advanced strategy for options. So in the newsletter, we broke down almost every single sector has the biggest mega cap in the sector, like Microsoft and Apple, Amazon. They're reporting earnings. And like you saw today, Tesla's on the move. There's going to be a lot of stocks on the move this week. Do you want to be in front of that or on the wrong side of that? I don't think so. So to answer the question exactly, Mark, what am I doing? I'm sticking to our stock and options report because we found a bunch of stocks that do not have earnings. And like Tyler said, if you picked any of those stocks, you're doing pretty good. Our stock and option report's on fire. I'm going to lock in profit quickly.
And I think earnings, I mean, that's the big story this week. And we're going to get into earnings here in a second. So don't lose that chart, because we're going to come, that little earnings whisper chart, because we're going to come back to it. Let's break down the intraday chart. Tyler, give me a 30-minute chart if you would. or a 15 or an hour, whatever you prefer, right? Just give me that intraday chart.
Come on, take her swim. She's coming, Mark. She's a little slow.
You know, one of the things that we have seen throughout the last couple of weeks are just improving technicals along the way. When we've seen this run, you know, what I find interesting about this run is that almost every pullback that you've had in this run has been very, very, very shallow, right? I mean, there's pullbacks because in the most strong trend, everything, you know, I mean, you don't go up every candlestick, right?
Right.
But the pullbacks have been really, really, really shallow, and the breakouts have been pretty strong. And you've seen this nice, consistent move upwards. I mean, when you look down at the intraday chart, you know what, you know, give me a breakdown of it.
Well, I think what's fascinating is it's so impressive that you can get one doji candle after however many up days we just had over the past 2 weeks. And the market's like, all right, I caught my breath. Let's rock and roll, right? It's very, very bullish when you get such a short-lived pause and then buyers come right back. It speaks to the undying bid beneath the surface. It speaks to the appetite of buyers right now. And I mean, you're the narrative guy. I don't know that there's really been any overarching mega theme that's driven this other than just, for me, supply and demand. So in regards to your specific question, though, I mean, the 200 period moving average, this is a 30-minute chart. So this is a, you know, 200 30-minute bars. We haven't broken below that. I mean, the little pullback on Friday was pretty benign. All the way up, you can see just very consistent buying beneath the surface. And then just again, after a short 1 or 2 day pause, there's your breakout today. There's no way you can construe this as bearish. It's very bullish, and it's just a matter of how far they want to push it before the next pause. 'Cause, you know, I don't know if one doji candle really does it, but meaning gives you the full pause you need from a swing trading perspective. But don't fight the tape, man. It's bullish.
It is bullish, and that bullishness is, you know, I mean, like you said, throw a dart right now, you probably have a good trade that you pushed on. You know, it's just not the S&P 500. Could you give me the NASDAQ, if you would be so kind? You know, we're seeing this strength, and we're seeing breakout levels, and we back out to a daily chart to just get a bigger perspective, because while we weren't at all-time highs on the NASDAQ, the short-term trend was very, very similar, right?
Yep.
Nice move up, trade sideways for a few days, breakout. I mean, do you see any, I mean, you're not at all-time highs, but do you see any dissimilarities between tech right now in the broader market?
Well, the only thing is remember, tech got hit the hardest on this correction. And so they dug the deepest hole. They had the furthest to travel to get out of it. And so there's your discrepancy in terms of where we're at versus the high. But is that necessarily bearish? I don't think so. I mean, I'd almost rather buy the NASDAQ to play catch up than buying the S&P if you really pressed me on it. I love the constructive nature, though. Again, it barely paused at all and going up again. That said, you've got a wild card this week with all of these big cap tech names, right? I suspect if Apple, you know, doesn't do well and Amazon doesn't do well, I mean, that may cause some continued underperformance in tech. But if you put that aside, the chart looks great going into these announcements. So let's hope they deliver and we get continuation.
No, and whenever you get this little pausing continuation, I always like to analyze the stock's personality. And I was looking back at, you know, the last deeper pullback we had in tech, which was in May, and then you came up, and then you saw like in mid-June it take that little pause, right?
Yep.
Took a couple little pauses on the way up, and you had healthy legs up after each of those pauses. The one that happened in early June, the one that happened in mid-June. I mean, we highlight that mid-June because I was looking at, you know, and I was looking at that mid-June pause late last night. I couldn't sleep. You know, I was kind of anxious about the market open. Sunday night seems to be the night I get the worst sleep of the week. Just a little, you know, anxious to get back in trading, right?
Yeah.
And I looked at, you know, that the nature of tech because, there's always that, how much does this have the room to run? Well, whenever you've asked that question on reversals, whether it was early this year in tech or the one in May, those little pauses, and when you broke out of those, you had another trip or two upwards, didn't you?
Yeah. Well, and rather than obsessing and worrying about how much more can we go up, I mean, the easier question has been just don't even ask it. Just say, what's the trend direction? And when the trend reverses from down to up, it's like game on, right? And so the signal the last couple of weeks has been the correction is over, the downtrend is over, we're back above the 50 MA. Now you get on the bull side and you assume that corrections are buying opportunities from here on out. And I think that probably continues into year end until the charts give you a reason to question otherwise.
No, and it's one of those, like, whatever your macro bias is, when charts turn constructive, one way or the other, right? Because, you can have really pretty charts on the downside. You can have really pretty charts on the upside. From a trading point of view, you want a piece of that. Let's go over to small caps real quick. Greg joked, Tyler, that you took a little vacation and then you came back and small caps, started getting back in the game here.
Yeah.
Now we've been dealing with a classic multi-month consolidation pattern. What do you see in the short-term chart that could be constructive or give aid to any analysis here?
Well, I mean, if you look at the pivot lows, I see these getting a little higher and steeper even, right? The rate of ascent has been increasing of late. We're back above the moving averages, and we're heading towards the upper end of the range. Now, maybe I'm setting myself for another round of disappointment if we get rejected for the umpteenth time in a row. I'd like to think that seasonality may give this attempt a little bit better odds than its predecessors.
Same here.
So you have kind of an intermediate term resistance around 2,300. That maybe is your stopping point before you get to the tippy top. Call it 2,350. I think 2,300, 2,350. Those are the two numbers probably that matter most. This would be a decent breakout here at 2,300. We're all waiting for the big guy at 2,350 to break out, but I don't know. I like the price action here. And you've seen some relative strength out of small caps as well some of these days. So I like it. It's constructive so far.
Just a side note real quick, Mark, on that. On that rut, I just have to hand it to Tyler, man, that, your cash flow condors has just been killing it on this one, man.
Yeah.
I've been talking about that in our live classes. And that channel you're drawing, can you kind of expand on what we're talking about, the cash flow condors? Because that, kind of late to chase that strategy now. My curiosity, Tyler, is, okay, I've been doing iron condor now for almost 9 months. It's been killing it outside that range. What do I do? Where are you saying 2,350, get out of my bear call? Are you saying if it hits that point?
That's a good question. How much time do we have, Gino?
Just tell me where the alert goes.
I mean, yeah, I think that for those that have had condors, if you're wondering when to maybe adjust or consider bullish hedges and such, I don't know that I wouldn't care about 2,300. I think if it takes out the top end of the range, 2,350, 2,360, when you look historically, when the rut breaks out of a 9-10 month range, usually you get some upside movement. And so there's a lot of different ways to handle that, whether it's getting out of the bear call or adding bullish exposure. I find that just owning IWM acts as a very natural hedge when the market goes up. Yeah.
Great answer.
But 2,350, 2,360, I think is the level that you want to watch for when this range is maybe done.
Awesome. No, it really is. I mean, we are seeing healthy price action everywhere. We'll get into sectors here in a few minutes to break those down. But, the healthy price action right now is not contained to equities right now. We go over to Bitcoin, whose price action has been so impressive over the last month. Get that little bit of pullback, right? Because nothing goes up forever. And, from a charting perspective, I want both Gino and Tyler's take here. Just from a classic, forget the trading instrument, the technical setup. What are you seeing here from just a classic technical analysis perspective? Gino, let's start with you, bud.
So, Mark, I'm watching this and I'm looking at the 10-day moving average, which I don't see it on your chart, but I have it on mine. It just did a trigger to swing low off the 10-day exponential moving average. And that signal to me is a very bullish swing low when it uses that support. I'm targeting the high of 67,680. Of course, that's the first target. That's a pretty good move. I mean, that's a decent percent move there. That could do that in 1 or 2 days, the way this thing's moving. But after the highs, that's where I'm like, okay, is this thing going to catch fire and keep on going? Is it going to take off like it does? Because this thing could break out. You can see in the past breakouts on a weekly. You can see them really, really just taking off. And Mark, this is one of those things. It really comes down to, where did you get in? I mean, if you're a millionaire because you bought this at $5 when it was IPO'd, you definitely got to put a stop loss in there somewhere and lock it in. But if you're a trader, you got to treat this just like a regular stock and use that 60,000 support level. And you've got to have your risk management down to a T in this thing. And it depends on how you're trading it, but this is a very bullish signal here. And we can see how everything's developing into cryptocurrency. And I can't tell you how many times I find out, I could have paid in crypto. Really? And it's starting to get more mainstream. We even have Old Money Holmes getting involved here. Maybe he's the one triggering the scandal. Who knows? But how do you trade in it? Where you got in? I'm bullish on this trigger right here. I want to see a follow through. And I'm looking at probably a trigger just above. I would have to say my trigger is 64,000, just above 64,000. And then my target again is going to be just above 67,700.
Now, Tyler, a lot of momentum traders, when they have a beautiful setup like this, like strong momentum run, pullback, potential trigger candle that could develop, as early as today, a lot of momentum traders will not just target the high from a few days ago. Why is that the case?
Meaning they'll do a target beyond that,
yes.
Right? Well, because that's what uptrends do. They don't stop at the prior pivot high. The definition of an uptrend is higher pivot highs and higher pivot lows. And so if you want to go for a more optimistic, but arguably equally realistic target, you look at the nature of the trend, right? You connect the highs. And when you do that, it projects a higher high on the next advance. That's what uptrends do. And so is it unrealistic that if the trend continues, it gets to 70K or 75K? Or no, it's not unrealistic. It's par for the course. That's what uptrends do. And so will any of us be surprised if this gets to 70K or 75K? No. In fact, it's a couple ATRs away. That's the nature of the trend. So that's your short answer there, Mark.
Yeah, and this is where like trading personalities and trading rules and how individuals approach it. The beautiful thing about a chart, because once again, this could be a cruise line or Bitcoin or whatever it may be, from a trading point of view, when you get momentum situations and then you get patterns and you get triggers, having how you play these setups and knowing ahead of time. Are you, Tyler, one to give it a chance to run with this particular pattern?
Well, look, if there's anything Bitcoin has taught you about maximizing gains, the most effective route has been don't take your profits too quickly or scale out or leave a runner on. So yes, of any type of trading instrument where you want to have a management plan that allows you to maximize gains and let it run, it's got to be Bitcoin, right?
Yeah, and Matt, nice to have you.
Thank you.
You talked about last week on the halftime report on Friday, about what potential developing setups could be. Like, I think my specific questioning to you was, what's the earliest trigger? And you talked about a couple scenarios. It could do the classic doji and then build, or it could build momentum just like this. One of the two scenarios are laid out, and we're getting that early potential signal. From a step system, step system is the bedrock of tackle trading that we use for technical analysis. From a step system perspective, what are you seeing here on the Bitcoin chart?
Yeah, I see a flag-based pattern that gets gobbled up at 60K and known support level, a significant whole number. And I believe when we were discussing this on Friday, you actually asked me, it was a little bit more in depth, and you were talking about where it could come down into on the pullback. And I drew up a Fibonacci retracement to show it could go from anywhere from 60K all the way down to 50K, and you're still in that pullback type of analysis. You don't know when the market is going to put in support. You can only prepare for those levels. 60K was in that ballpark of one of those levels. It's the 9 EMA. It's a previous known resistance level. It's also a significant whole number. And so what you're really trying to look for, on the step system when you're dealing with any flag or traditional retracement pattern, is you're waiting for that intraday analysis to settle down, to slow its momentum, to start showing an intraday bottom, and then the analysis starts building on top of that. And when you look at this on a 30-minute chart on Bitcoin, you see the pretty quick drop in price on Friday as you're coming down into that 60K level. And what do you see? You see a nice little support start building. You see a little bit of consolidation, but that's only step one. Remember, slowing momentum of some variety is not increasing momentum of the other. It's really about what builds after that. And then when you see the breakout coming into the futures market, you see that breakout happen, you start to build a high base, you break out of that during the European hours last night, and then you see a cash build come in today in the US market open. And so you start to see that support build on an intraday perspective, because again, you have what is known as catalyst of support. That's everything we geek out on as technicians. The 9 EMA is the momentum. The 20 SMA is a standardized retracement type support level. Significant whole numbers, previous areas of resistance. Those are all catalysts, but support is only support when the market actually forms it. And that's why traders love intraday analysis, so that they can see these levels of support form in real time. And what they were looking at from a catalyst perspective thus comes to some type of confirmation. And that's what we saw here north of 60K on the over the weekend, as you saw support type try to build on Saturday. You see that the futures market open, start to build in Bitcoin. You see the European open really kind of show that bullish momentum on top of that. And you can see that thirst start to really kind of drive that demand back up. And now you're at that one of those points on the chart where you say, all right, which one's real? Which one's real? Was it the drop in price at that resistance level, or was it the recovery over the last 24, 48 hours? Well, that's the point you're at on the chart. And if you can get back up above, we'll just give it 64,000. If you can get back up above 64,000, and you're literally right there right now, all of a sudden you start seeing a little bit more clear air in front of the tradable instrument, because you don't have as much left to the chart to really compete with. You start to see orders come in. And so you're starting to see the build here, and you're looking at a little bit of a continuation at this point.
That's a pretty clean trigger, right? It's why intraday analysis is just one of those things that you don't have to obsess about it. But go take a peek when you're getting ready to make a trade. Go take a peek at the intraday chart just to see if there is a clean trigger somewhere on there, and that's a pretty clean trigger. That's a pretty.
It is.
It's a good on the daily chart. It's a good flag on the daily chart too. Nice little 2-day pullback. Gets gobbled up right there at the 9 EMA. Upward movement in price. 64,000 confirmation trigger. It looks very healthy actually from a technical perspective.
Listen, Tom Lee, I love Tom Lee. I just enjoy his personality. He's from CNBC, and CNBC, take it or leave it a lot of times. Tom Lee, when Bitcoin was down at like 40,000 a month ago, he's like, I still think it can go to 100 this year. He's like, I know it does. I know my prediction doesn't look good, but boy,
you go draw a Fibonacci extension, you can see 100.
No, and listen, all I know is for it to get to 100 this year, it's got to trigger that intraday breakout first.
It's like Tyler said, though. I mean, this is an instrument that can absolutely fly. And when you guys were talking about 75, that seems like a daunting number just because we think about, oh my goodness, that's $10,000 of price. Well, that's 2 days for Bitcoin.
It's 2 days for Bitcoin. And while not quite the high flyer, crude oil certainly has not been unimpressive recently, right? I mean, steady, 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 steady. She goes, right? Tried to do a little peekaboo up, got slapped down, a little bit today. Matt, what are you looking at here on the chart other than a nice steady uptrend?
No, it is a little bit of a steady uptrend, but I do think you got to be slightly concerned with the peekaboo type wick you did have there on crude. It tested above that breakout channel against the high base, and this is a tough high base. It's kind of got an increasing resistance zone from the intraday perspective. You got a lot of choppy wickety wick type stuff right there above 84 and change, 84.80. I think this is a little bit concerning, quite frankly, this type of price action. When I see, and again, this is not a guarantee by no means, but when you do see a market test above a breakout channel, get smacked right back down, it's got to give you a little bit of just curiosity. What's going on? What's happening on the chart? Where's the mindset of the buyers? And when the market's breaking out of all-time highs, and you're talking about Bitcoin confirming on a retracement, and crude oil's kind of puking it up in that, I think you got to be a little bit concerned with the fake out that crude tried earlier today.
No, a little peekaboo gets slapped down.
I'm specifically talking about crude. It would not change the way I see the energy sector, though.
No, and it's something that you and I comment on all the time. Is like whether crude is at 85 or 75, those oil companies are going to be making a lot of money.
Oh, who would sign up for a nice box between 80 and 90 at this point?
No, and we're seeing, I mean, let's go take a little peekaboo at a lot of things. I mean, like pull up Oxy. I could pull up a lot of charts here, but I mean, we're seeing the attempt to stretch, right? Like, because a lot of energy stocks, even though crude oil has been climbing in recent weeks, have taken a little bit of breather. I mean, you're seeing a version of this pattern in a lot of places. If you pull up Marathon Oil, you've seen a little bit of a breather the last couple of weeks, and this attempt to stretch up. Tyler, I mean, so when we got breakouts in these situations, but we have downward pressure on the day of the breakout. What do you do in that specific situation where, I mean, beautiful pattern on Marathon Oil here, right? Clean trigger, you get a breakout, but we get downward pressure on the day of the breakout.
Yeah, I mean, the answer is it depends. I mean, it depends. If you bought the breakout, you just got to manage it now and hope it doesn't pull back too deep, or at least enough to stop you out, right? I'm selfish in this situation because I got out of energy stuff before I went on vacation, and I've been like on the sidelines. So no offense to all you who own these energy stocks, but I kind of hope they all get
Tyler's like, give me the pullback.
Listen, that's my trademark. I didn't miss.
Yeah.
So listen, I say that all the time because I'm so conservative. I did it. I've been in this, and so screw you. I hope you don't get your opportunity. So,
but look, it was bound. Let's say that this breakout attempt fails and oil has a couple of down days. I mean, look, this is going to happen at some point. Crude oil cannot just run straight up to 100 in a straight line. It could, but it probably won't. So you're going to get shakeouts along the way. You expect it. You have it as part of your management plan, and ultimately, it's healthy, right? I mean, we want pullbacks along the way. We want a more I don't know, a less angled, I guess, trend line. I think it's fine. I wouldn't worry too much in the short run. The dip is going to be a buy regardless of how deep it comes anyways. I just want in, Mark. I mean, let me in, okay?
So you want to dip. If it dips here, Matt, like, I mean, this is one of those patterns, like breakout traders. It is like, of course, whenever you buy a breakout, you're like, run, baby. And oftentimes they do. Every once in a while, you buy a breakout, though, and then it tests your faith on the breakout. what from a technical perspective, let's say I didn't get in the breakout, Matt, what am I looking for?
Well, a couple things. Number one, you're looking at on the daily chart. Number one, has anything been violated? Has anything been broken yet that would give you some pause for concern? Because you're looking at something fairly similar in terms of a price action on MRO here that we were looking at on crude oil, right? When you're taking a look at /CL here, you see it test up, come right back down, but then it comes underneath that 84, give you a little bit of concern that it could fade even more. And that's certainly something that can transpire here. But when I'm looking at MRO here, I see a stock that gapped up on the cash open, got gobbled up as it tested some highs here early in the trading session, comes right back down, but basically is par for the course on the actual trading day. It gapped up, tested up, came right back down. Now it's testing support. I see this as one of those intraday, we used to call them the Cody specials, right? Where you get a breakout, you snap back, you come down and you test that resistance channel. Well, that happens quite often, and it actually can be a fairly decent intraday entry point. If you miss the breakout, you're looking for that test of support. And so when you come back down to a 30-minute chart here, you see the cash open here, gets gobbled up, gets a little bit overextended, comes back down. Now you come back down and you test that breakout channel. And that's what's occurring here over the last hour in price action, is you're really testing that breakout to see if that breakout is legitimate. Well, you come out to a little bit longer time frame here. You see the little wickety-wick nonsense over here at about 1683. Well, you start to see that zone here is support intraday, right in that zone where the low of the previous candle was. You got the inside candle there. And basically intraday, you're saying, well, if we can get back up above, say 1685, clear these wicks over here to the left-hand side, right into that range, you could get that nice little piggy up at that point. So I see this as an intraday test that's testing that support level, but also could lead to another entry right above that resistance channel right there, about 1685.
I know. I love technical analysis because you like whatever you like, right? But then I love the precision of when do I enter? When am I putting probability on our side? This is what we do at tackletrading.com. If you aren't a pro member, go to the store tab, sign up for a 15-day free trial. We break down technical analysis and all kinds of good stuff nonstop at tackletrading.com. And we have a lot of courses that teach you the basics of this, Technical Analysis 101. You can ask questions in our traders round. So go to store tab, check out that 15-day free trial. Well, listen, equities up, crude oil up, Bitcoin up. Listen, silver metals, silver and gold, like those precious metals, they're not, they're like, listen, we want to party too. We want to party too. Now, Matt, I have in the course of 2021 been faked out by upward price movement on gold more than once, more than twice, right? You've had, some little, let me give it an up. Let me give it an up. Only to be like, no soup for you.
Yep.
What do I need to see to say this run is worth not some cash flow, because I think cash flow is always appropriate on gold, but to say I want a little directional bias?
Well, I think you're getting it right now. I mean, at Tackle Trading, we rank all of our, the sectors. We rank the commodities on a weekly basis. We rank them based on our scoreboard. And over the weekend, we were looking at gold and gave gold a 10-point upgrade as it was approaching that 1800 breakout. I talked about this on Friday as well, how if you do see a close, and that is important to me. We did test above these levels on Friday as well. Let's see a close above 1800. But if you do see a close above 1800, I do believe that you now have the daily chart to the level where you would be at least slightly bullish on it with that 35 type ranking philosophy where you are a moderate bull. You start to appreciate the short-term price action a little bit more in terms of your analysis than the overall chop of the intermediate trend. And the intermediate trend is still very, very choppy, wide ranges between 1680 and really kind of 1900. And so anything within that range is going to be some degree of neutrality. It's really about the short-term trend and the short-term trend building consistency. And the short-term trend is really based on the previous trend, and when that previous trend kind of ends, And when you're looking at this now historically, you see that as the left shoulder, you see right here is the head, you see that as the right shoulder, you see that as the breakout, you see that as the first retracement. And thus this breakout here against 1800, you're actually seeing this as the second wave in the reversal, which can be a fairly decent trading environment. I feel it's going to be choppy, and I still have that overhead of, wow, market's breaking out. Is gold really going to enjoy this nice little upward movement in price without some degree of volatility? And so that is in the back of my head here. You still like you still like equities more than gold. But again, as gold continually gets a little better and a little better and a little better over the course of the last few weeks, and again, we went from negative 40 at tackle just a few weeks ago to 50, now up to the positive 40. With today's price action, you're probably looking at a 35 ranking. You see that continually get a little bit better. Well, what else gets a little bit better as gold gets better? Well, that's the miners there. GDX starts to get a little bit better as it fights up against that. So a little bit of the same philosophical view on GDX and gold. As gold gets a little bit better, I think the consistency in GDX gets a little bit better as well. You have that same type of philosophical viewpoint of crude oil. As crude oil gotten better and better and better, well, guess what? Energy started getting better and better and better. And there's been a lot of traders and a lot of investors who have been enjoying a lot of that price appreciation in energy. Well, guys, that analysis took months and months and months to build into that, to where we really saw this really amazing energy environment that has been going along with crude. And so again, I kind of feel like as long as gold continually improves, and it absolutely is, the confidence level you have in the directional moves of the underlying, meaning the miners here and GDX in general, from both a directional and a cash flow perspective, starts to increase as well. So for me, it's really about the consistency that is building in some of the underlying, like GDX and the miners, more than gold itself, because I see gold is, and again, I see it continually improve technically, but I still see it as very choppy. I still see it as very volatile, and I still see it as extremely news driven.
Yeah. Now listen, those individuals that have a diversified portfolio where they have a little bit of this, a little bit of that, man, it's all working today. It's all working today with very, very few losers. Let's get into a few items of stock chart. Now, Matt, you're going to have a busy week this week. 25% of the S&P 500 reports earnings this week. And on the halftime report, you are the breakdown earnings guy.
Oh, we're going to have some fun.
So you have
earnings roundup this week.
No shortage of things to cover this week. Light on the earnings today, just a couple of things. But before we get into the couple of earnings, and it's just a reminder, listen, great market conditions. We pull up Snapchat real quick. This is one thing on the Sunday night prep class I do for Cash Flow Vikings, my little trading lab I do at Tackle Trading, and come give it a try. You can also find information on that on the store tab. You know, one of the things I says is like, listen, be aware where earnings are. And this is something you talked about a few minutes ago, Gino. Like when you're having a party and everything's working, I mean, listen, we're all going to have a loser here and there, right? But man, you don't want like one stock to just ruin your party, you know, and earnings can do that. Gino, how do you approach earnings?
Well, like I said earlier, Mark, is you either have to avoid stocks with earnings if you don't know how to play earnings, but if you're not, familiar with earnings reports, they are surprises. And I've been trading for 23 years, almost 23 years. And honestly, I've searched for people that can predict earning gaps and which way they're going to go. They're not out there. We just don't know how the big money is going to react to earnings. So you're going to get these gappers that could gap over your protection, back over your stop loss. Heck, sometimes they gap over your target. The thing is, Mark, is it can ruin a good plan. So you have to be careful. So you can play ETFs or things that don't have earnings for the next couple of weeks. And in fact, in the Gino Gem segment, I'm going to show you guys how to make sure you know where earnings are on different softwares, because it's out there. You just have to know the date. And, most traders I know, Mark, unless they're doing some kind of advanced option strategy like a straddle or strangle, which were designed for big moves in a stock. And there's strategies that are, neutral, that play up or down. You don't pick a direction. There's strategies for that kind of action. But if you don't know those strategies and you're not familiar with them, it's always best just to get out, protect yourself, or buy a put if you know how to do that. Buy a put to protect your downside. But yeah, if you're showing profit, and we talked about this in the Cash Flow Club, your first choice and usually your best choice, if you're showing profit, is just to get out. And if you're an investor, that's a whole different thing. But a trader needs to protect their profit and to protect their plan. Don't let it get ruined by one single event.
Man, we got a lot of earnings this week.
A
Any words of wisdom as we head into a massive week of earnings?
Yeah, buckle up.
Yeah.
It starts here today. Not a lot this morning, but later on today, you got the mega giant Facebook, and we're going to be looking at some raw numbers coming out of Facebook. But I'm certain there's a lot of traders that are looking at other things on Facebook as well. They've had an apparent name change that they're looking at doing over the course of the next couple months. Obviously, they've been in the news all over the place, and so Facebook's going to have some volatility in that chart, I believe. But it's like, even though Facebook's going to get all the news coverage tonight and tomorrow, I mean, everybody and their dog's going to be talking about Facebook. You know what I'm looking forward to actually talking about tomorrow? I'm actually looking forward to talking about the aerospace and defense companies, quite frankly. Whereas everybody's looking at Facebook and what Facebook represents to the communication space, to the broader market in general, is certainly an important stock. It's a $900 billion behemoth of a company. It's a market mover. And I'm not trying to throw cold water on it at all, because I'm going to cover it as well. But in terms of what I feel is important for traders moving forward, you're seeing a lot of good things in the quarter, not on Facebook here, but on the aerospace and defense companies. For example, just tomorrow morning, you got two mega giants in that space, RTX, Raytheon Technologies here. They've been doing really, really well over the course of the last little bit, breaking up against all-time highs. Can they justify that? You also have Lockheed Martin here that has done absolutely gangbusters over the course of the last month and a half. You've had this entire space start to do really, really, really well. Can this space, a very important space to the market, can they continue their recent momentum? And can these earnings reports that are coming out in the next 24 hours justify what a lot of traders have been front running in this area of the market? That, to me, and again, this I might be on an island here, but that to me is equally as important as all the coverage that Facebook is going to get. And then you also have GE, and you got, we've been talking about basic materials solidifying itself after that W pattern off the 200-day moving average, and the miners getting better, FCX getting better. Those not the underbelly, but those stocks that have been beaten up a little bit in materials have been really kind of solidifying themselves. And specialty chemicals has been kind of all over the board here. Well, we get a couple specialty chemical companies reporting tomorrow as well. Sherwin-Williams, just juggernaut themselves. Sherwin-Williams, a leader in that space. How are they going to handle this all-time high breakout? That to me is an open question. And so, yeah, Facebook is the big dog. It's going to get all the media coverage. Everybody's going to be talking about it. We're going to lead tomorrow with Facebook. Obviously, it's the 900 billion behemoth out there right now. But then tomorrow we start talking about a lot of other things like aerospace and defense. And this market this week is going to have its head on a swivel here, because once you get done with Facebook tonight, well, guess what we have the next 5 days, guys? We have Apple, Microsoft, Google, Amazon, Visa, MasterCard, Exxon Mobil, Coca-Cola, Eli Lilly reports here tonight, a third of the S&P, a third of the Dow Jones. And so I would say, a long-winded way of answering, Mark, but buckle up, because it's going to be one of those weeks where there's going to be some misreads, there's going to be some opportunity. But for me, this is a week where you got to appreciate what the market's been doing recently. Upgrades almost at every sector, not named communication at tackle trading. You're navigating a breakout in the market, but you're in the front of some major earnings catalysts. Now, very quickly, just as earnings go, I heard you and Tyler talking initially, and sorry for being a little late to the halftime report. I had some had a computer go bust on me. So I had to get
Been there.
the old laptop up and running there shortly. But I heard you guys mention something that was curious. You said the market's building consistency, but not really based on a theme. Well, I do disagree with that. When you were talking 2 weeks ago coming into earnings, the expectation on blended growth was right around 27.5. Right now, and we only have 24% of S&P 500 components reporting so far. We're early still, but right now, 32.5% on a blended earnings growth, and 8 out of 11 sectors are beating that 30% number, which I said was the holy grail this quarter. I said coming into the quarter, keep an eye on blended growth. If you are averaging above 30%, you're going to see a market start to build a little bit of theme there. The market is building a little bit of the theme there, given the fact that the expectations coming into this quarter were muted a little bit. They're beating those expectations, and they're beating them fairly decently right now. You also have, as we started last week, we only were looking at about 80% of companies that were beating the EPS number. Right now, that, and I said this last week as well, watch that get back into that mid 80s, and you're seeing right now 84% of companies in the S&P 500 are beating the EPS number. You're also seeing 76% of companies, which is much better than the 5-year average, but not nearly as good as the last 2 quarters, beating the revenue expectations. And so overall, earnings has provided a little bit of confidence to the market as the earnings reports so far have been better than expected. But that can change very quickly if Apple, Google, Amazon, Microsoft issues some type of concerning guidance report, have a nasty miss. And so earnings so far has been a catalyst for the market. Can that continue this week? And I feel like if we can get through Apple, Microsoft, Google, and the big dogs this week, if we can get through fairly unscathed, this market could be primed for something special. But again, I do think buckle up is the philosophy, because it is a week of navigation, in my opinion.
No, buckle up indeed. And let's transfer into stock talk. And if you are going to buckle up in a Hertz car, it's likely to be a Tesla EV there. You thought you were done with Hertz, right? One of those, like CNBC had to run like 18 shows.
Oh, look at Tesla.
Yeah, they had to do 18 shows. But Hertz announces the largest, basically, remember what CNBC did? They did about 18 shows saying, listen, Hertz has declared bankruptcy. Don't buy this stock. But Hertz
I remember.
Well, Hertz is back in the news with the largest ever purchase of electrical vehicles. This is the largest ever single purchase. News of Hertz ordering 100,000 Tesla vehicles to build out an EV rental fleet. The deal is reported to bring in an estimated $4.2 billion in revenue for Tesla. Largest single purchase ever of EV, 100,000 Hertz building out an EV fleet. Talk about a catalyst to break you to highs, Matt. That's, we have catalyst, and then we have the largest ever single purchase Tesla's ever made, right? 100,000 cars. I mean, what do you do here? I mean, that is a monster catalyst. That is a monster breakout.
Well, I mean, the breakout of 800 was legit. The breakout of 750 was legit, and the breakout of 720 was legit. About 2 months ago, I was talking about how the breakout in Tesla has not been as consistent up until the point when it did start breaking out and showing price appreciation. And then the breakout of 800, I just felt like was a special chart. Saw a lot of front running going into Tesla. Tesla reported a very good earnings report. That was a major catalyst. And now the money's just piling in. Good stories coming in on Tesla. Now you're talking about completely overextended as it's going to navigate that ultra special $1,000 mark.
Yeah, I
don't see any new trade here, though. I mean,
I think this is
this
is a legitimate catalyst. Listen, I've bashed Tesla for years. This is a legitimate catalyst. This is,
if there's Tesla shorts out there, if this is a catalyst fundamentally where they'd be like, maybe my fundamental conviction is not as where it needs to be on this one.
Listen,
It's a major catalyst. It's a major story for Tesla. Congrats to Elon and Tesla. They're killing it over there right now.
well, who's not killing it today is old Pinterest. PayPal reportedly saying that rumor last week that we were going to buy Pinterest. They said they are not pursuing an acquisition of the social media company at this time. Pinterest surged up on speculation that there was a buyout negotiation offer close last week. PayPal saying that that's not on the table. PayPal
that one never made sense though.
It didn't, right?
It never made sense for PayPal to do this.
And PayPal is like, listen, our stock's going down. People don't like this. They did a J Powell. Yeah. They walked that back. But Pinterest here, heading into earnings, a little bit of heat on ad revenue in social media companies. If you owned Pinterest, would you be a little concerned heading into earnings after you saw what happened with Snapchat?
Well, I think you have to be concerned, and you get Facebook and Twitter before Pins reports here, and so the new privacy policy out of Apple, I feel like got immediately priced in. The concern was immediately put to the forefront. That's the only thing people are talking about when it comes to Facebook's earnings and Pins and Twitter's is how does that Facebook privacy policy impact their revenue, and are you going to see the same type of 20% reduction in price that you saw on Snapchat last week? So yeah, Mark, I think you should be concerned. I think anybody that's involved in this space is probably concerned regarding Apple's policy. But again, Apple's policy is not a new policy. It's been around for the entire year. It's just we're now starting to see it really start to have an impact in downloads, in subscription counts, in ad revenue, and so yeah, I think there is every right in the world to be concerned over these.
All right, give me BKKT. MasterCard. I mean, we've had the credit card companies have. MasterCard, Visa, been very crypto friendly in their institutional adopt. The company's up big after CNBC reported that this newly traded crypto firm will provide custodial services for MasterCard. MasterCard will soon allow banks and merchants to integrate crypto into their products, including Bitcoin wallets, credit and debit cards that earn rewards in crypto, and loyalty programs where points can be converted into Bitcoin, and Bach on the news that is going to be providing custodial services for that. They couldn't even wait for a chart to develop here, right? You couldn't even give us a pattern here. But I thought it was interesting. Continued news of how crypto is just continually getting integrated into into society, one at a time. Obviously nothing to see here from a trading point of view, Matt. But
it's interesting.
But I found it interesting. Couple earnings, and then we're going to transition into sector roundup. Kimberly-Clark, not a bad necessarily report, but they did say inflation and supply chain issues are hurting their companies. KMB, if you would, like a lot of consumer staples companies are doing. Negative reaction, trying to bounce off it on earnings. A slight miss, but it was more the guidance that was a concern on this. And you'll get into staples here in a second, Matt, when you break down each of the sectors. And so I'll save that analysis there. But just another reminder that, listen, earnings can go a lot of different directions, right? And be cautious. Last one I have is QSR. Listen, I love QSR because I love Whoppers. This is home to Burger Kings, among other entities. I don't even know how to make that candle, Matt, but I don't know if I can buy a Whopper on that candle.
You are definitely not buying a Whopper on that candle. That candle is a bearish, a little bit of a bearish engulfing candlestick pattern, gap up, sell down. Had to be some commentary on their guidance to cause something along those lines. Yeah, I'm certain of it.
And once again, supply chain, inflation, labor issues on
they hit the gambit.
So like both on Kimberly-Clark and on QSR saying, listen, we got labor shortage impacting potential margin. A lot of fast food workers, I mean, we started seeing this 6-9 months ago, where you start to see we're aggressively hiring, like, and this has manifested itself. And man, it just feels like there's gonna be some winners. The market, I think, is going to be overall, in that earnings theme. If those numbers can continue, we're going to have a lot of information on that week. But it is just another reminder that, listen, there are companies out there, and market reaction but that's an ugly chart, right? Am I going to get a chance to buy a QSR maybe a little bit cheaper here in the coming weeks?
Well, based on that breakdown, and there's no support till about 57. Yeah, I would assume you would see a little bit of a continuation on the
57. I want my Whopper at 50.
You may, but again, when you're walking down the steps, you got to kind of walk down the steps, and 57 would be the next support level. So yeah, I would think the expectation on QSR with the violation here would be some more downward movement in price. But I just want to say this: the market is embracing more positive earnings. But if you've read enough earnings reports and seen enough price response, this is not abnormal in this market condition right now. The market itself is seeing earnings as a catalyst, but I have seen personally as many gap downs as I have gap ups. It's just that you're seeing a lot of leadership from things like Tesla. You're seeing a lot of leadership in the banks. You're seeing some leadership really build on the top. But I've seen as much of this as I have anything like Tesla as well. And so this is not abnormal for this earnings, because the number one thing we said coming into this earnings season was you got to start with one thing. You got to start with beats. You got to start with beats. You can't have chinks in that armor right now. And when you have QSR, and when you have Kimberly-Clark, and when you have other companies that we saw last week as well, warn of margin, warn of supply chain, warn of inflation. When they when they discuss the things that are worried to the market participants right now, you are seeing this behavior. And so you got to approach earnings in this quarter with a little bit of navigation. We're trying to get through this because there's greener pastures on the other end of this earnings season collectively. But individually, you're going to see some volatility, in my opinion, this week.
Indeed, you are. Let's transfer into Sector Roundup or Sector Spotlight. What are we calling this? It's a segment we do every Monday. I can't remember the last time you didn't.
Sector Roundup.
Sector Roundup. Where Matt, this is my new. I get to go to the bathroom, go get some food, get a drink.
Oh, this is your new dollar analysis.
This is because
okay.
But unlike the dollar analysis, I actually listen while I'm doing those said activities. But we break down the sectors.
I would listen because we got some upgrades to discuss here. We do have some upgrades.
Seriously, and I'm not even saying this as a sales pitch because I'm a terrible salesperson. Like, identifying sector strength in 2021 has made individuals a lot of money. I can't remember a year, because it's always been important to see sector strength. But man, there have been times where you've had defensives just take off for 5 weeks. And then you've had tech take off. And then you've had cyclical. Man, identifying sector strength has been a money-making endeavor in 2021, more so than any year I can ever remember since I have been doing it 23 years. I'm doing about 15 from Gino. It's just one of those things that you got to pay attention. And Matt breaks that down. So I'll turn it over to you, my brother.
Well, let's talk first and foremost about the categorizations of sectors. Once again, we categorize the 11 sectors in 3 ways: one cyclical, one defensive, one aggressive. Your aggressive sectors are technology, communication, and discretionary. Let's start with the aggressive sectors, and let's start with technology here. You just got to love the weekly, well, not discretionary, technology here. You got to love the build as you kind of found support at that 150, and you've just fought a nice battle over the last 2.5 weeks as you worked your way back up into that major all-time high resistance channel right there at 160. Technology on the backs of the breaking back up above the 50-day moving average last week. Let's go drop that down into a daily chart. You see it reclaim that 50-day moving average. And then what I really like about the tech space here, and yes, we are approaching the Microsoft, the Googles, the Amazons, and some of those are discretionary, some of those are communications, but they all are in the S&P 500 here. When you're looking at that, you got a nice high base type setup as you're looking at a little bit of a breakout potential here. I look at the breakout channel at 160, see this a little bit underneath that all-time breakout channel at 160. So I wouldn't exactly call the hammer candle today a confirmation candle, and definitely not in the face of specifically Apple and Microsoft. Looking at that 160 for that next confirmation. Positive moves out of Facebook, positive moves out of Apple and Microsoft specifically, would certainly see a breakout of 160. Keep an eye on 160, but as of right now, technology ranked right there with the 5-point upgrade, given the break back up above the 50, the consolidation all last week, justifying the higher price threshold. Nobody really wanted to sell last week. I do find that slightly impressive right there at the 30 handle. But that is not the story of this this area of the market, meaning the aggressive areas. It has over the course of the last 3 weeks, it's all about discretionary here. Looking at that weekly chart, look at the continuation pattern, just struggled at 185, struggled at 185. Look at the breakout, look at the price appreciation. And yes, a lot of this is based on what Tesla is providing the discretionary sector, but you just saw today, positive catalyst comes out, Tesla skyrockets. You're having a lot of momentum that is building in this sector right now. And even though I feel like the daily charts are, a little bit range up here in the discretionary space, try to do a little bit of a two-step reset here. Not necessarily, I wouldn't call that a pivot. Need 3 candles for me to call that a pivot. So I'm just going to give that a little bit of an Allen Iverson hesitation crossover analysis, where it's based on and why that's important, guys. It's important for me as a technician, because where do I put my wave count? Well, here I would put my wave count going from 182 instead of 190. That means this is now overextended if that is your technical read. Other traders would say this was reset right there. Other traders would say, well, 190 is now the new support level, and I wouldn't have that much disagreement with them, quite frankly. Technicians will see things a little bit differently, but regardless of how you see it, you got to see it a little bit as overextended. Don't pull up the RSI a lot on the chart, but you are seeing a little bit of overextended scenario in discretionary. 10-point upgrade from a sector perspective certainly justifies the current momentum we are seeing in this area of the market. And again, look like that's going to continue. So nice little 10-point upgrade at Tackle Trading, coming right there at the 20 handle. And then to round up the aggressive sectors, we do got to talk about the problem child. And the problem child is tied to all things social media right now. Facebook, obviously, all over the news with everything that they've been going through in the last couple of weeks, including investigations. And, I'm sure there's going to be congressional acts and congressional hearings. And then we got an earnings report to navigate. You're seeing a market that just simply has struggled in the face of a market getting better, in the face of discretionary getting more consistent, and probably the #1 most bullish market with momentum behind it. Technology has solidified itself and is threatening an all-time breakout. And then there's communications, where communication just simply cannot get out of this neutral type trend. And so until we see a break one way or the other, and for me, 82 stands out on the bottom level, we can sit there and talk about 79 as a support, but even if that violates, you're really looking at 78, right where that 200-day moving average is. We've seen the reversals in the past. We've seen them in basic materials. You saw it a little bit in industrial. You've seen it in other areas of the market. Recent 200-day moving average support has proven to be really good buy zones for the market in the short term. Does communication give us that opportunity after Facebook? It's going to be one of those. Facebook's going to play a role. Negative price on Facebook or a negative reaction to the earnings tomorrow on Facebook. Yeah, we're most likely talking about communications coming down to test that 200-day moving average. So it's one of those areas of the market I don't feel like traders have a lot of confidence or conviction in right now, especially when the stories of the market are not about the money they're making or the money they're losing, but it's about their their impact on society, that's not necessarily an area I want to focus on. It's an area that's going to be news driven. It's going to be volatile. You need to really kind of let those news stories subside a little bit and get those news stories into the rearview mirror, especially with Facebook. But I'm not certain that's going to be in the short term, given the fact that everybody's going to be talking about Apple and their privacy over the next week or so, with Facebook, Twitter, Pinterest, all reporting over the next 7-8 trading days. So it's an area I think that is just more about neutrality and navigating the neutrality. Got a 5-point downgrade at tackle trading over the weekend following Snapchat's negative report and the following moves we saw on Facebook and Twitter. Seeing that get priced in on the Apple privacy policy fairly quickly. So right there at the 45 handle, but a downgrade. And the only downgrade at tackle trading as the market is building up into resistance, literally breaking out of all-time highs right now, this very second. And yet communications just cannot get any traction moving forward. So it's going to be an interesting one to look for, but I think we need to see some bottoming analysis and, quite frankly, some of these negative storylines to subside a little bit before communications gets any of that market money love. When you're looking at the more cyclical areas of the market, energy, basic materials, finance, industrials, these are areas of the market that are building consistency, building into bullish trends, seeing continuation analysis in almost every facet of it. Energy has been the leader in this space for quite some time. Finance was right there with it last week at the 20 handle. Well, we're going to rank it at 20 again this week. Looking at energy, seeing it more as consolidation here. If you would have given me the breakout, I would have actually fought for a little bit of a breakout here, Mark. But we didn't see that going into the rankings. Had this as a high base, looking for a potential breakout in the energy space here. Positive 20 ranking on it. A breakout would put that right there into the financial territory, and that is threatening a breakout right now. And finance is one of our highest rated sectors at tackle trading at 15. Saw another upgrade following more positive reactions to earnings in the past week. Remember, earnings started with the financial sector, and then the market's been building on that over the next 2 weeks. Finance right now, right at that 15 handle, a little bit overextended, quite frankly, in the short term. Haven't seen any resetting of the pattern, any resetting of the technical scenarios that we're looking for. Had a little bit of an opportunity last week where you might have seen a high base. This is just continuation here of the previous breakout. For me, I would like to see some type of reset from a pattern perspective, some type of flag that comes into the rising 9 EMA, some type of high base where the 9 EMA catches up to it. Because at this point, and this is just my read, but I do have it as slightly overextended. But again, a sector that is building in consistency and doesn't want to stop and wait for us, doesn't want to hit that yield sign, just wants to keep on powering through from a technical perspective. And then when you're looking at materials and industrial, very quickly, take a look at XLB, see that W formation, broke out a week and a half ago, put it into bullish territory, seeing the continuation. But one key point to look at here as you start to navigate this 86 handle, keep an eye on that old resistance over here between 86, 86.60. This is going to play a role in resistance this week. Keep an eye on that. Wouldn't be too surprised to see a little consolidation as that 9 EMA does try to catch up to it, as you're threatening that intermediate breakout channel between 86 and 86.60. And then when you're looking at industrials was trailing behind the recovery a week when it comes to basic materials, but it is trying its best to catch up as quick as it can, fighting back up above every single moving average, has momentum behind it. The only reason we're not looking at a little bit of a bigger upgrade, because when you're looking at materials, finance, and industrials, all 5-point upgrades for us at tackle trading, the reason you're not seeing a bigger upgrade from an industrial perspective is you're coming into major resistance and you're overextended coming into it. You got to love the momentum. It's similar momentum And especially if you just look at the last week, guys, you're seeing very similar momentum in finance, in industrial, in basic materials. You're seeing very similar price movement in all three of those areas of the market. The difference is finance is back up above all the resistance channels. Basic materials and industrial is now in those fights of those resistance channels. So it wouldn't be surprising to see a little consolidation in this week, as all three of these areas of the market are slightly overextended, but specifically materials and industrial coming into some pretty significant resistance areas. So it's an area of the market that is certainly attracting more and more and more buyers. They're starting to get better from a technical perspective. It's just one of those scenarios where we're coming into a week with 150 S&P 500 components reporting earnings. You're slightly overextended from a price action perspective, coming into some major resistance levels. Again, we navigate this week. I feel that's very positive to the market moving forward. Even if we can, and navigate means we get through it, right? We see some consolidation. We see some defensive nature of the market come in as they fight for these higher prices. I think that would be very, very telling moving forward as we get into November and December, those very important seasonality type areas of the market. But again, overextended, coming into major resistance levels with a bevy of earnings on top of that. Just maybe tap the brakes a little bit from a market perspective as we navigate that. And then when you're taking a look at the defensive sectors, no areas of the market got bigger upgrades than the defensive sectors at tackle trading. We talked about healthcare all last week, getting better and better and better. You know, I've been navigating this reversal here from the time we doubled bottomed at 125 to the breakout of 128 to the build into consistency as we start fighting up against that 132 handle, right where that 50-day moving average is. 10-point upgrade here in the healthcare space puts it into that positive bullish territory. It had been in some degree of bearish territory, had seen some degree of consolidation over the last 2 weeks as you saw that W come in at that 125 handle, but now the reversal has taken shape. The reversal has been confirmed. The reversal is now overextended. And so 10-point upgrade puts it into bullish territory, but you're in front of not a lot of earnings, but you got a couple earnings reports here tonight. Eli Lilly, a big dog. There's Novartis, I believe, is reporting as well. So a couple big dogs in the healthcare space reporting today. But again, you're starting to see this build from Johnson & Johnson last Tuesday on. You're starting to see consistency come into the healthcare space. Little bit of a buyer's fever happening going on. Now you're overextended. Let's see that secondary pattern. Let's see that high base with the tight trigger against 132. Yeah, or let's see a pullback here. Let's see some type of flag, some type of retracement. Overextended. I'm approaching the healthcare space very technically right now. For me, it's overextended. I wait for secondary pattern to develop. Be with us in the halftime report as we break that down all through the week. But a nice price response following Johnson & Johnson. 10-point upgrade puts it into bullish territory. And you saw follow suit in utilities. You saw it follow suit in staples. Looking at utilities here, W pattern gets confirmed last week, goes into bullish territory right there at the 35 handle as well. And then staples, you talked a little bit about staples earlier today, but you know what, Mark, this is a space, head and shoulders formation off the 200-day moving average. It's been a choppy place, no doubt. But once again, things get a little bit more clean as you start to build into the consistency. You got to like staples, testing down today, kissing off that 9 EMA, breaking back up above that 50-day moving average. Now look at this as a continuation trigger. And the number stands out to me, guys. It just does. It stands out to me because it stood out to the market on Friday and it stood out to the market today. That number is 71.4. 71.4. You look at the ding literally on the close of Friday. Look at the double wick action up there today. 71.4 looks like a confirmation type to the reversal. Keep an eye on that as staples looks to fight back up into that bullish territory. And then last, but certainly not least, because real estate starting to solidify itself as well, coming off the lows, all of this space behaving very similar to one another. But again, positive earnings results last week did get the short-term analysis a little bit overextended. So I think you're catching a little bit of a theme here. A lot of reversal analysis got confirmed last week in the defensive areas of the market. You had the cyclical areas of the market the week before that confirmed their reversals. Technology confirmed it the week before. You had energy and others confirm it before that. The market is building into this bullish type philosophy as we come into some very important November and December seasonality for the marketplace. But you are slightly overextended as you're coming into that just this week.
There is no shortage of choice out there. Is there?
Well, there is. As a trader, there is. It's called the 155 earnings reports coming out of the S&P 500 this week. So I'll make sure to ask Coach Frank of that question on Friday. But there is no shortage of bullish behavior happening in the market right now. And yeah, I do think we're slightly overextended coming into some major earnings. Again, this is a week that I feel that if we can just navigate this week, the next 2 months gets better. And so I kind of feel like it's a little bit of a tap the brakes in front of Apple and Google and Microsoft and Amazon and some of those big dogs. But again, see a trade, you take a trade, the market's bullish.
See a trade, take a trade. Listen, that's some good stuff. That is some good stuff. And listen, this is going to be a big week. We mentioned that maybe 4 or 5 times today on the halftime report. It's going to be a big week for earnings, but we will be here to break it down all week. You know, Monday at the end of the show, whether the Dodgers win or lose, and if you don't think I'm making 45 Dodgers loss jokes this week.
Listen, he's feeling bad. Come on.
Listen, I watched Battle LA before the Dodgers lost just to make me feel about Los Angeles getting blown up, just in case the Dodgers won. Those insufferable LA sports fans. But we love you, Gino. We like to close off every Monday with a little Gino gem. Gino, do you have a gem for us today?
Of course I do. Of course.
All right.
Great.
And I like this. You know, Gino breaks these little just a few minutes to break down something practical that you can potentially implement in your trading, in your management of software, in just broadening your knowledge base just a little bit. Gino, give us your gem.
Yeah, let me share my screen real quick. And yes, this is appropriate gem for this time and date because we're talking about earnings, guys. And in case you didn't miss it, Tyler, Mark, Matt, myself, this whole show have been talking about how many earnings are coming out this week. These are some big names on here, guys. And every single sector has a big name represented this week. Be careful. Be careful with earnings. With that said, how do you find your earnings date? How do you know when it is? Like we just had a question on a stock that has earnings after the bell. And if you don't know that, you can really get burned. There's so many sites out there. This is a popular one, Earnings Whispers, but it's kind of helpful. It just kind of gives you some big names. Then you have things like the heat map. This is a very, very popular tool on many websites. A lot of people don't realize it. You can scroll down to the bottom and down here on the left, you can click earnings date. And I just like how, the sector, like here's technology. And it kind of tells you, like, if it's before earnings, it's in purple here. I'm kind of using the wrong color to draw. So let me use yellow here. So if it's in pink, all the way to darker pink to almost like black here, it's still before earnings. All the lighter greens and grays here are after earnings. This is kind of nice because you kind of see like, okay, we got a lot of big names coming. Here's Apple, here's Microsoft, here's Google. The bigger the square, the bigger the company. There's a lot of neat.
We got Coca-Cola. I love this, because it's not just, the big ones we know, but I see Coca-Cola, I see Exxon, I see Chevron, I see
Right. And like what's interesting about this, Mark, is check this out. When I go to like software here, when I hover above it, it says now, that's ServiceNow, but look at all the other companies below it. And if I can try to do this quickly, well, there's a date of the other companies that are in that industry next to it. See that? They're all like in that industry next to it. Here's Microsoft. Here's the ones in the same industry, same sector. And you can kind of see the dates there too, right? Kind of gives you a feel for like, okay, where's a lot of earnings left? There's a lot of pink over here. There's a lot of pink over here. But these big names is what we're worried about. So that's one way. But what I want to do is I want to get into a hack. That's what I'm known for, is hacks are ways to make life easier, ways to make scanning faster. And so I want to talk about a few different softwares we use. We use Thinkorswim, we use FinViz, we use, what is that one? TradeView, which is real popular. Is when you're looking at stocks and you're looking at different softwares, why not just have the earnings date there for you? So for example, the most popular, second biggest broker in the world is Thinkorswim. I'm going to bring up a chart and I'm going to talk about what's a popular stock, Apple. I'm going to put any chart in here. On the chart, since you're a trader, you're looking at charts, you can actually see this is dividends over here in the green. Here's earnings in the past. That's great. But what about going forward? See right there, that is earnings on Apple coming up. And that's such a time saver because I can see right here just by hovering above it when the earnings date and all that stuff is. Now to get this on your chart, it doesn't automatically pop in on everybody's chart. Number one, on Thinkorswim, some of the paper monies don't do it in certain countries, so you can only do it in the real. But what you want to do to get that little earnings in the future there is pretty simple. I'm going to go real slowly on this part just so you see it. Down here on the bottom, there's a double arrow, and there's three different places I'm going to go, three, to show you how to do it. There's a little double arrow right there, trying to pinpoint it. When I left click on that, corporate actions, I want to left click on corporate actions. That means earnings, dividends, that kind of thing, or big events. And that will save it in there. Then I want to go up here to the little sprocket right there. And I want to left click in there. And I want to go to equities. And I want to make sure corporate actions is right there also. Okay. And also just to make sure, if you go on time axis right here, there's that corporate actions. I want to make sure this one is clicked right here. Why? Because this is going to make the chart stretch out until it shows it. So if it's in the next couple of weeks, it'll show it. So I'm going to click that right here and I'm going to go like this. Now see how it's right there? So that's like, a few days away, 3 days away. Let me go to a different stock real quick. I'm going to go to John Deere. Now, John Deere, I know John Deere has earnings coming up, but see how this is, it's expanded for 3 bars in the future. Where's the earnings? It's really important down here. Let me go back to show you the hack down here. Here's part of the hack, because a lot of people already know how to add earnings to their chart. When you go in here to the little double arrows, I'm going to change this expansion area. I like to go, just me personally, I like to go 15 days in the future. That's 15 trading days, 15 bars. Why? That's 3 weeks. I want to know like 3 weeks ahead if there's any earnings or dividends or big events. And of course, that corporate action is there. I hit apply, hit OK. And now you can see there's the earnings, because now I'm 15 bars here. And there's earnings for John Deere, because I could plan to be in this trade for 3 weeks without getting burned. I know exactly when it is. So that is Thinkorswim. You want to save that. Again, if it doesn't work in paper money, what you want to do, one of the fixes is, if you want it to work in paper money, just go to support and tell them, hey, hook me up with real-time data in my paper money. If you have a funded account, they'll do that, and make sure they activate your corporate events, and they will do that. Next one real quick, Mark, 2 more real quickly I want to talk about is one of my favorite ones I use is FinViz. I'm pretty sure everybody knows what FinViz is. Why? Because when you're in our screener here and in our newsletter, yes, we have a screener. You just come down here, pick your sector. You pick your sector, and it's going to open up in the screener. Now, when it opens up, it might look like this. Let me refresh this. It might look like this right here with the charts. Where's the earnings? How do you figure out where earnings is on FinViz? How do you put it on the chart? Well, here's another hack. You go to custom. Here's custom. Now you see over here on the right, I always like to put RSI in here. I don't need all this stuff, but I'm just going to undelete this so you can really focus in on this. Right there, earnings date. See it right there? Earnings date, right there. What this does is it adds the earnings date in the right-hand column over here. And then I can sort it by, okay, who's past and who's to come. So like right here, August 3rd, all the way to today. So these first 18 right here have already passed. Now, when I'm here and I go back to charts, they'll be in that order. Or I could say, let me go to the earnings in the future. These are all in November in the future. So when I go to charts, they're in that order, okay? But what I like to do is the second part of this hack is not even knowing the earnings, is when you have them here, look how fast I could just flow over the ticker and see the chart. So I'm looking for like a breakout or a swing. There we go, breakout just above 90 there. And I can see right here, earnings November 9th. If that's far enough, at least I know if I have enough time, whatever. The second part of the hack is this. I like to look at basic charts in FinViz. Why? Because it's a bigger chart. They're in the order that I just had them in. And sometimes, like, me personally, I like them in order by RSI because RSI, this is the strongest trending ones. But see now that it scrambles my earnings date. Check this out. When I go to basic, I have them in RSI order. And let me look for, okay, here's a little trigger right here in target. The earnings date is right there. Let me circle it so you guys can see it. The earnings date is right there. So I know B means before market, A means after market. So that's the hack on FinViz. Final one, Mark. That's the final one. There's another popular software out there called TradeView. On TradeView, the earnings is right here on the chart. How did I get it there? Watch how easy this is. You right click on the chart. You hit settings. And right under events, let me circle it right here. Right under events, so right click settings. You click on events and you can show splits, earnings, dividends. I have it set for earnings right here. Hit OK, and there is your earning date. And you could drag it, and you can see, you could click on earnings, it'll tell you about it. So earnings is on the chart in front of you, so now you can prepare for that. So Mark, find out whatever software you're using, all the people out there, I don't know what you're using. I'm just going over 3 of the most popular out there. Make sure earnings is on the chart before or out in the future so you can plan your trade and know when it is before market, after market, and set it up and save it like that. You can save it. See, I'm saving it right here. And when I log in, it saves it. That way it makes life easier. That is the hack of the week. Perfect timing because we have hundreds, if not thousands of earnings coming out in the next 2 weeks. Don't make a mistake by not knowing the earnings date. And that is Gino's gem for the week.
Listen, we're going to have to rename that segment Gino Gems if you drop that much knowledge in that short a time period. Well done, Gino. Well done. Listen, going to wrap up our show. Thank you for being with us. Onboarding tonight with Frank here on the YouTube channel. If you are new to tackle trading and just want to get a rundown of all the many features we have, think of it as a Frank he just breaks that down so well. 7 o'clock tonight. And then Dynasty Investors. I believe, if I remember our meeting tonight, I'm not 100% sure. I'm checking the events calendar. But if you go to tackletrading.com, you can, just like I'm doing right now, go look at all of the different events that are being held. You go to our events tab and you see Step Mastermind Group. You see a YouTube webinar tonight. Didn't promote that. It looks like we have a YouTube webinar tonight, not Dynasty Investors. Looks like Dynasty Investors is tomorrow night. We got a Beginner's Guide to Options with Tyler Craig. I didn't even know that was on the schedule. See, that's what you get when you go to the events tab at Tackle Trading. You can see all the goodness. Just go to events, tackletrading.com. So we got Step System Mastermind and a YouTube webinar tonight here on YouTube. Lots of good stuff going. Listen, we've talked about it several times. My final thoughts heading into the week. Lots of earnings. Listen, it's nice price action. It seems like almost everything's working. Yeah, there's a few here and there that are getting beat up, but that's normal, of course. But as a whole, portfolio is pretty healthy. Portfolio is doing pretty good. Just be careful with earnings, right? We don't want any single trade because we're going to have losers along the way. That's just part of doing business. But we don't want any single trade to just ruin what could be a good party as we head into the Santa Claus season, right? Seasonality kicking in, a lot of bullish factors kicking in. But listen, it's a big week. We're going to break it down all week to see if these technicals, if this earnings theme can continue. Matt will be here all week. But until then, Gino, do you have any final thoughts before we close up shop?
Yeah, pay attention to earnings this week, guys. Read the newsletter. I put a lot of stuff in there. And what's really cool about it, in case you didn't catch the beginning, our stock and options report, we weed out anything that has earnings in the next 2 weeks, and we try to trade those things that aren't going to be affected by events. Great list. Keep your stops in tight. If you get a big move, lock it in because no one knows what tomorrow brings. Have a good trading week.
Indeed.